Welcome to the deep dive. Today, we're plunging into what feels like a monumental shift happening in digital assets right here in the
It
US.
really is something.
Yeah, and our deep dive today is all about getting under the hood of these recent US crypto policies, the ones from 2025 onwards.
Yeah.
How are they fundamentally reshaping things?
That's the core question.
And our mission really is to unpack the impact, the multi-year impact of these changes on, well, a really key player, Cipher Mining Inc.
Good focus. Yep.
We'll look at its valuation, where that's heading, its regulatory risk, big topic there, and just how attractive it looks now as a US-based crypto mining investment.
Makes sense.
Okay, let's unpack this. What we seem to be seeing is a really intentional strategy, a deliberate move to position the United States as maybe a global leader in digital assets.
What's truly fascinating, I think, is how these policies, they're not just about regulation per se. They're designed to give clear guidance and actually actively encourage crypto innovation here, domestically.
Right.
It's a significant pivot from how things were approached before, aiming for a very different foundation for the industry.
A foundation that, based on what we're seeing, marks a pretty historic break from the previous administration's stance. It feels like we're moving from, well, uncertainty
A lot of uncertainty.
to a period aimed at providing clarity and, frankly, strong support for digital assets.
Exactly. And the important thing here is it's holistic. It's
Yeah.
not just, isolated tweaks. These policies combine that regulatory clarity with a very pro-business, pro-innovation approach across the whole digital asset space.
Okay, so let's dive into some of the key policies then, the ones defining this new era. Starting with maybe the biggest one, the Genius Act. People call it the Stablecoin Law.
That's the one, signed July 2025.
Oh.
And yeah, it's the first major piece of federal crypto legislation. Huge landmark.
So what's the core of it? What does it actually do?
Its importance really can't be overstated. Basically, it sets up a clear rulebook for payment stablecoins, things like requiring 100% reserve.
In safe stuff.
Yeah, exactly. Liquid assets, U.S. dollars, treasuries, and they need monthly disclosures too. Transparency.
Okay.
The goals seem to be, well, threefold. First, legitimize stablecoins, bring them into the mainstream. Second, bolster the U.S. dollar's reserve status. And third, kind of interesting, boost demand for U.S. treasuries because T-bills have to be part of those reserves.
And it got broad support. I remember seeing the vote count.
It did, yeah. Bipartisan backing passed the House 308-122. Pretty decisive. And you had officials like SEC Chair Paul Atkins, known for being crypto-friendly, calling it a monumental step forward.
And the industry reaction, they must have welcomed it.
Generally, yes. Viewed as long overdue,
Yeah.
framework to boost credibility, maybe spur wider adoption.
Now, before the Genius Act, wasn't there something leading up to it, a precursor bill?
Right, good point. The Clarity for Payment Stablecoins Act, that was back in 2023. And it heavily informed the final Genius Act. Well, for instance, Senator Bill Hagerty's draft. It proposed letting state-chartered banks issue stablecoins without needing Fed approval. That kind of thinking laid the groundwork for a more consistent federal-state approach.
Trying to fix that patchwork of state rules.
Exactly. Get a cohesive framework for the big issuers, like Circle with USDC.
Okay, so stablecoins covered. What else? There was the Digital Asset Market Structure Act, too, right? The Clarity Act.
Yes, passed by the House around the same time, July 2025, during that crypto week. Its job is to draw the lines, basically.
Lines for what?
Regulatory boundaries.
Yeah.
Like, is this crypto a commodity or the security? Who oversees what? Trying to modernize the whole framework.
So getting away from just suing people, regulation by enforcement.
That's the stated goal. And regulation by enforcement. Provide clear rules. Sort out the SEC versus CFTC jurisdiction fights.
And for a company like Cipher Mining, that matters because
Well, even though they're miners, they deal with crypto assets. Less legal ambiguity is just good. It reduces risk significantly.
right. Now, on the other side of the coin, there's also what they're not doing, the anti-CBDC stance.
Very clear policy there. Actively opposing a U.S. central bank digital currency.
How are they doing that?
Well, the House passed the Anti-CBDC Surveillance State Act, basically telling the Fed no retail CBDC. And the administration directed agencies to just halt CBDC development.
And the reasoning, privacy.
That's the main argument. Preserving financial privacy, encouraging decentralized options instead. For miners like Cipher, this removes a potential long-term, well, threat, I suppose.
How so? A U.S. CBDC would hurt Bitcoin.
Potentially, yeah. If a US CBDC became super popular, it could reduce public interest in open cryptos like Bitcoin over time. Less demand, less value, impacts mining.
Got it. So it's not just preventing things, it's also actively promoting others, like these strategic Bitcoin initiatives.
Yes, that's a big part of this new picture. March 2025, an executive order established a strategic Bitcoin reserve and a U.S. digital asset stockpile.
Whoa, okay. Strategic Bitcoin reserve, like holding gold.
That's the analogy people are drawing. It signals the U.S. government might actually start accumulating Bitcoin strategically. Sources suggest high-level talk about a federal Bitcoin reserve to, and this is a quote, legitimize Bitcoin's role as a global asset.
That's huge.
Yeah.
If the government endorses Bitcoin like that, what does it mean for miners?
It implies really strong support for the industry that, produces the Bitcoin. You've got officials like Treasury Secretary Scott Bessent reportedly saying everything is on the table with Bitcoin.
Wow.
It frames miners as potentially crucial for U.S. financial and even national security.
Okay, and then maybe the most direct impact for Cypher, mining-friendly incentives.
Right. The administration has clearly signaled it wants to encourage domestic mining, not block it. We're hearing proposals for things like tax credits, deductions.
So what exactly?
Accelerated depreciation for their mining equipment, maybe breaks on energy costs, real tangible benefits for blockchain businesses, especially miners.
And this is a big change from before, isn't it? Wasn't there talk of a mining tax?
Oh yeah, the Dame tax. That proposed 30% excise tax on their electricity use. That would have been brutal. But it was scrapped back in 2023.
So no punitive tax now.
None. The whole policy vibe has flipped. It's about supporting miners like an economic strategy. Basically, U.S. miners get carrots now instead of sticks.
Okay, carrots instead of sticks, a whole new pro-crypto environment. So how does this fundamentally change things for a company like Cypher Mining? Let's start with their valuation. How's that impacted?
Well, this new regime, this favorable U.S. regulatory setup, it's clearly set to boost Cypher's valuation over the next few years. You can already see it in investor sentiment.
How so?
Remember the rally when the Genius Act passed? July 2025? Ether went over $3,500. Bitcoin touched $118,000. Maybe even briefly $120K.
Right, prices jumped.
And higher crypto prices directly translate to more revenue for miners. Plus, and this is important, mining stocks like Cypher often act like high beta plays on Bitcoin.
Meaning they move more than Bitcoin itself.
Yeah, they tend to amplify Bitcoin's price swings, both up and down. So a rising Bitcoin price gives them an extra lift.
And it's not just quick rallies, is it? The stablecoin law, Genius, seems more fundamental.
Exactly. By making stablecoins legit, it paves the way for more mainstream use. You see analysts like at Standard Chartered saying the stablecoin market could explode maybe $260 billion now to like $2 trillion by 2028 under these rules.
Wow, $2 trillion.
That signals a potential boom in the whole digital asset economy. More activity, more demand for Bitcoin, which is great news for producers like Cypher.
And does the clarity itself affect how Cypher is valued beyond just the price of Bitcoin?
Oh, absolutely. Before, investors slapped these big risk discounts on U.S. crypto firms. Regulatory uncertainty, right?
Yeah, who knew what rule was coming next?
Precisely. Now, those uncertainty discounts are starting to shrink. It lets Cypher be valued more on its actual business, its hash rate, its mining output, its costs, less on external guesswork.
So better valuation multiples, price to book, things like that.
That's the expectation, yes. As the market trusts the business model more, investors might even pay a premium for being U.S.-based now, given the clarity.
And with this policy support, presumably, Cypher can expand more easily. That must boost valuation, too.
Definitely. Access to capital should get way better. Banks, institutions, they're likely more willing to lend or invest now the rules are clearer.
Makes sense.
And think about it. Lower financing costs, maybe some tax breaks. That increases the present value of all their future earnings. Cypher's already talking about a huge pipeline, right? Over 2.6 gigawatts of power across 11 potential sites.
2.6 gigawatts, that's massive.
It's huge. Could put them among the world's biggest miners. They mentioned a 100-megawatt site, Stingray, by 2026. So, yeah, more future mining capacity directly means a higher company valuation today.
Okay, but a potential downside, maybe? If the U.S. becomes so attractive, doesn't that mean more competition? Could that hurt margins?
That's a fair point. It's a nuance, definitely. More investment means more miners, which increases the overall network hash rate, making it harder for everyone to mine coins.
Right, the difficulty goes up.
Exactly. Look at Marathon. They massively grew their hash power, but their share of the global rewards actually dropped a bit because the whole network got harder to mine on.
So Cypher faces that too.
They do. It's an industry challenge. But their strategy seems to be focusing on efficiency, upgrading their machines, like at their Odessa site, trying to have one of the most efficient mining fleets.
So hoping efficiency offsets the increased difficulty.
That's the plan. Now, on balance, you'd think the boost from a growing crypto economy, plus the cost help from incentives, should probably outweigh the mining share dilution. The overall trend should still be positive.
Okay, let's put Cypher in context then. How do they stack up against the other big U.S. players?
Right, so Cypher, as of late 2024, was maybe around 7 to 10 exahashes per second, holding about 1,400 Bitcoin. But the key is that huge 2.6 GW expansion plan, and they do a partial HODL.
Meaning they hold some Bitcoin, sell some.
Yeah, hold some long-term, sell some to fund growth, keeps things flexible.
Okay, then Marathon Digital.
The current giant. Around 57 exahashes by April 2025. And they hold a lot of Bitcoin, over 48,000. They're mostly strict HO dealers and focus on vertical integration.
And Riot Platforms.
Another big one. About 35 exahashes, maybe 19,000 Bitcoin by May 2025. They sell some Bitcoin monthly, but they also do that interesting power strategy in Texas.
Earning credits for shutting down sometimes.
Exactly. Demand response. So if you connect this to the bigger picture, yeah, the rising tide is lifting all these boats. Well, the dynamics are interesting.
How so?
Well, all three benefit hugely from these policies. Marathon, with that mountain of Bitcoin, is like a leveraged bet on the Bitcoin price itself.
Right.
Riot and Cypher are maybe more focused on reinvesting heavily to grow their actual mining capacity. And Cypher, because it's starting from a smaller base but has those huge expansion plans.
Could see faster percentage growth.
Potentially, yeah. If they execute well on building out those 2.6 gigawatts, it's about execution risk there.
Okay, let's shift gears slightly. How have these policies changed Cypher's regulatory risk profile? You mentioned the cloud of uncertainty before 2025.
Oh, massively. That cloud was real worries about hostile regulations, outright bans like China, weird asset classifications, killer taxes.
Like the Dame tax.
Exactly. But these recent policies, they just slash that regulatory risk.
Yeah.
The Genius Act passing is a huge signal. The U.S. is integrating crypto, not killing it.
And the administration's tone helps.
Definitely. Viewing Bitcoin and crypto as beneficial, having crypto-friendly people like Paul Atkins at the SEC, it suggests guidance and collaboration, not just enforcement actions.
So fewer worries about, say, mine tokens suddenly being called illegal securities.
Those fears have really faded. The Clarity Act helps there too. Cypher just operates in a much, much more predictable environment now.
And those existential threats, bans, taxes, they're off the table.
Pretty much. That Dame tax is dead. Zero chance of revival under this policy direction. Instead, you've got support.
And outright bans seem unlikely.
Virtually non-existent in the U.S. context now, especially when you have industry leaders like Marathon CEO Fred Thiel framing Bitcoin mining as a matter of national security.
Right. That reframing is powerful.
It is. For Cypher, being in a country that might see your business as a strategic asset, that drastically lowers the risk of hostile government moves.
No, new rules mean new compliance burdens, right? Doesn't that add risk?
It's kind of paradoxical, but structured compliance actually lowers long-term risk. It replaces ambiguity with clear expectations.
How does that work?
We'll take the Genius Act. It makes stablecoin issuers follow Bank Secrecy Act rules, AML, KYC stuff. For miners, we'll likely see guidelines on OFAC's sanctions compliance reporting. They'll probably be reasonable, developed with industry input.
Okay.
Remember, early 2025, OFAC clarified rules on sanctions screening for crypto. That removed a big worry for exchanges and miners. So the risk of accidentally messing up drops as the gray areas get filled in.
And coordination between federal and state helps too.
Big time. The goal is alignment. Genius tries to align stablecoin rules. And the broader push is for harmony on digital assets generally. That's crucial for Cypher operating in Texas, North Dakota, Ohio.
Different states, different rules, potentially.
Exactly. But now you see synergy, like Texas apparently being inspired by the federal stance to propose its own state strategic Bitcoin reserve. Consistent attitudes reduce surprises.
So what does this all mean for someone looking at Cypher mining as an investment from a risk perspective?
The bottom line for you, the investor, is that holding Cypher stock is just far less of a regulatory gamble now. It's operating on a much more robust legal foundation.
So the risk profile shifted.
Definitely high before, down to maybe low moderate now. The main worries are standard business stuff, compliance, managing environmental impact, not existential threats anymore.
Okay. With that clarity and support, let's talk about attractiveness. How appealing is Cypher now as a US-based crypto mining investment? Does this open the door for bigger players?
Absolutely. Increased institutional participation. That's a key outcome.
What?
Clear laws unlock that institutional capital. Big money managers often have rules against investing in legally gray areas. Now, with laws like Genius and Clarity, crypto gets that imprimatur of legitimacy.
Like a seal of approval.
Sort of, yeah. And you see regulators seeming more open to things like spot Bitcoin ETFs getting closer to approval. That helps normalize the whole space.
And how does Cypher benefit specifically?
As a 100% US-based company, listed on NASDAQ, it's perfectly placed. Institutions wanting Bitcoin exposure without regulatory headaches might see Cypher as ideal. It's like investing in digital gold production in a safe, stable place.
Does this also boost confidence in their actual operations, their ability to execute?
I think so. Those potential tax incentives, they could directly help profit margins, maybe even speed up expansion if there are grants or loan guarantees involved.
Right.
Plus, knowing the government is supportive, not hostile, gives investors more confidence that Cypher can actually hit those big growth targets, building out those new sites from 2025 to 2027.
Less risk of getting shut down unexpectedly.
Exactly. Less disruption risk. Unlikely the EPA or states suddenly crack down, especially if miners are cooperating on things like grid stability programs. Investing in Cypher becomes more about standard business fundamentals now.
Like efficiency, growth.
Yeah, and less about navigating unpredictable regulators.
You mentioned the national security angle. Does that add appeal?
It adds a strategic, maybe even geopolitical layer. Crypto mining is being framed as a strategic U.S. industry. That attracts investors interested in national security tech leadership.
Like investing in defense or energy?
Similar thinking, yeah. Cypher can be seen as part of securing America's future finance role. If that view that Bitcoin mining is critical, like gold in Fort Knox, takes hold, U.S. miners could get long-term bipartisan support.
Could the government even become a customer?
It's not totally crazy to imagine a U.S. strategic Bitcoin reserve program involving partnerships or buying agreements with domestic miners down the line.
Yeah.
Pure speculation, but possible.
How does this compare to miners based outside the U.S.? Does Cypher have an edge?
A clear edge now, I'd argue. U.S. miners get property rights, rule of law, and a friendly regulatory framework. Many foreign competitors face geopolitical instability or shifting legal ground.
So the U.S. becomes even more of a magnet.
These policies basically pour fuel on that mining migration to North America we saw after China's 2021 ban. Cypher's U.S.-only focus is a huge selling point.
No risk of foreign bans?
None. No forced moves. Just operating in a country with lots of energy and supportive policies. That makes it seem like a safer long-term bet.
Okay, but within the U.S. group, Marathon, Riot, Cypher, how does Cypher stand out now? What's its unique appeal?
Well, Marathon and Riot are strong, no doubt. Marathon's size and huge Bitcoin stash make it almost a proxy Bitcoin ETF. Riot has its Texas Energy Smarts.
So where does Cypher fit?
Cypher's differentiation is really about that growth potential and newer infrastructure. A lot of their capacity is coming online now, 2025, 2026, using the latest tech, building efficient sites like Black Pearl.
So pitching themselves as the next big thing.
Kind of. They can pitch themselves as the next generation miner scaling up fast in America's new crypto boom. Their relative youth, that huge pipeline. It suggests more potential upside if they nail the expansion. This raises an important question, though. For you, the listener, what really stands out about Cypher's specific position here, especially as they bring these new, efficient facilities online in this supercharged environment?
And finally, thinking longer term, how does being U.S.-based position Cypher strategically?
If the U.S. succeeds in becoming the global crypto hub, being based here is a massive advantage. Preferential access to markets, innovation.
Collaborations, maybe?
Yeah, companies like Cypher could collaborate with U.S. research, maybe work with national labs on energy efficiency or grid stuff. Being at the center means access to talent, capital, partnerships.
Making it more future-proof.
Arguably, yes. Being U.S.-based allows seamless integration with the growing U.S. crypto financial system. It feels like a more durable long-term position.
Okay, so let's try to sum this all up. These policy shifts from 2025, they feel like a real watershed moment for U.S. miners like Cypher Mining.
Definitely feels that way.
And over the next few years, the idea is these policies fuel a kind of virtuous cycle for Cypher.
That's the thesis. Bolstered valuation from higher crypto prices and easier expansion, dramatically lower regulatory risk, and just enhanced appeal to investors as legit strategic business.
So Cypher's path looks, what, markedly more positive now?
Markedly, yes. With this strong tailwind, Cypher can focus more on the core job, adding hash power, running efficiently. They know the basic rules are set, and they're favorable.
But business risks remain. Bitcoin price swings, execution.
Oh, absolutely. Normal business risks are still there, but removing those huge regulatory and political overhangs, that lets Cypher's actual investment potential come through much more clearly.
So the U.S. is positioning itself as a crypto haven, essentially, with mining as a key part.
That seems to be the strategy. A thriving domestic mining industry looks like part of the plan.
It brings to mind that sentiment, reportedly expressed by leadership pushing the Genius Act. No delays, no add-ons. This is American brilliance. We are going to show the world how to win with digital assets.
Strong words.
It leaves you thinking, doesn't it, that maybe these policies aren't just about one company's stock price, but about a bigger U.S. play to win the global Web3 race. And you, the listener, you might just be watching that unfold right now.